Hello, everybody. This is David Schwer with Stockerfinance.co, and today I'm going to talk about 5 investing tips you must know. These investing tips are really close to home for me. I personally always follow these whenever I'm doing my investing or my trading. This is basically how I base my personal investments off of and how I go along to choose them as well. And this is some really just important advice that I think everybody should know, whether you're an avid investor, a day trader, or just in the financial world at all. So, number one, be fearful when others are greedy and greedy when others are fearful. This is a very famous quote by Warren Buffett. All of you should know who Warren Buffett is. And basically, this quote is incredibly impactful because it's you can see it happening in today's times. Some examples of where this quote really takes place are the cryptocurrency rise and fall, which is more recent. For example, people really got greedy during the cryptocurrency age. When Bitcoin is going up towards 20,000, people were just buying, dumping money because all they cared about was making money off of this coin, even though they didn't understand what it was backed by, what they didn't have an understanding of what cryptocurrency meant as a whole, what the point of it was. And a lot of those people who didn't understand this and who were very uneducated ended up losing tons of money. I personally know lots of people who just were who understood it and just loved cryptocurrency, who just couldn't give it up, and they ended up losing tons of money. And so it's really hard to see that. But at the same time, a lot of people who in recent days bought cryptocurrency as it was at the very bottom have made some money as cryptocurrency has started to slowly rise up, in my opinion, in a more healthy trajectory. So the 2008 housing crisis is probably an even better example. Just because I feel like it's a little more, it's in the past. It was more of a long-term event than the cryptocurrency rise and fall, and there's a lot more information around this. So the 2008 housing crisis, if you don't know about it, you should definitely go research it. The Big Short is a great movie to watch if you just want like a quick overview of what happened, and it's also very entertaining in my opinion. So the 2008 housing crisis, though, after it happened, obviously lots of people lost money, but a lot of people actually made money because people were so fearful of the housing market as a whole. No one wanted to go in and buy homes. Everyone was renting. And so people who went around buying super cheap real estate ended up making lots of money, as now the housing economy as a whole and real estate has really just taken off. It's back on track. It's doing very well. And those people who had the chance to buy it at those such low prices made lots of money. So the tech bubble implosion is another example. During the early 2000s, after the tech explosion, basically, where lots of companies went out of business, it was just a big bubble waiting to pop. And once it did, only a few companies were basically left after that. And people who were able to buy shares of these companies at such a low prices ended up making lots of money, because today those companies are at a much, much higher value. As many of you may know. And so the people who had the chance to get in and who weren't fearful at the time and who actually could make a logical decision based off their own facts and knowledge, which is, we're going to get into the next slide here, which is about that. They ended up benefiting a lot more. So be fearful when others are greedy, and greedy when others are fearful. I'm going to try to slow down talking here because I feel like I'm going a little quick. Anyways, so do your own research. This is very important, especially relating to the last quote. Because even if you're not fearful of the market currently and you think that it is a good time to buy, you want to be confident when you're going in, whether it's buying real estate, whether it's purchasing shares of a company, or however you're investing your personal money. You could lose something in it. There's always a risk. And so you want to lower this risk as much as possible by being as educated as possible. So don't rely on others. I've personally had times where I've trusted other people and their opinions, and then later on they've been totally wrong and it's screwed me over. And not only does it make an awkward relationship after that, but you also have it's a negative impact on yourself and your finances since you lost money. Doing your own research allows you to develop your own opinion, discover new information someone may not be telling you. So I know, especially during the cryptocurrency age, I was pretty into it, and I did a lot of my own research on the side, and ended up finding a lot more and uncovering a lot more information, which led to me actually making a decent amount of money and not losing too much after the crisis. I'm not trying to be arrogant in this sense, but I'm just saying that you do have to do your own research. It's super important. This should be an obvious one, but a lot of people just go off what other people say, or the news, which is number 3 here. If it's in the news, it's too late. So obviously, you should do your own research. And if you're basing investment just off of what's in the news, that is probably the worst decision you can make possible. Once something is in the news, it means it's already happened. They're reporting on something that has happened, or they're not reporting on something that is going to happen. That's what the news does. They're trying to get you engaged. They're trying to show you something and make it very, very basically clickbaity as possible, so that you keep watching the channel. And so if it's in the news, it's too late. Now, I'm not saying it's bad to watch the news. A lot of times I do learn stuff from watching the news, but it's important to go back to number 2 and do your own research after watching it. The news can also be somewhat biased. There's just a lot of things about it that I don't trust. I never base my investments just on watching the news. For example, not to just diss on Jim Cramer here if people are fans of him, but during the 2008 housing crisis, he said that Bear Stearns was a buy during the crisis. Basically, there's videos of him saying, "Hey, you should buy this stock of this company," even though the company ended up going bankrupt. So that's just one example of you probably shouldn't trust a lot of these hosts and a lot of these TV analysts who go on there. You really should just form your own opinion, but it is okay to take their opinion and then compare it with other information. So I'm not saying they're bad people, but I'm just saying you should do your own research and compare. All right, number 4, overtrading. So this is one that doesn't necessarily relate to the quote as much as some of my other points on this, but it is a sense of greed. People can get into overtrading and day trading where they really are just focused on making money, so they end up making tons of trades and just really overdoing it. It's much more important and it's much better to make one large trade. And Warren Buffett talks about this quite a bit in interviews, where if you just make one large, confident investment, then that will usually have a much better outcome than making lots of little investments along the way or little trades along the way. Because with every one of those little trades, there is a fee. And so these fees add up and end up taking away a lot from your investment, or making your loss a lot more amplified, since you're having to pay so many of these fees. Where if you had just made one larger investment, or just one very confident one, then you could end up making probably a lot more, because you don't have to pay the fees, and ends up with just less risk overall, especially if you're buying that first investment at a good price. So this one can definitely vary, because people do like to average down their prices, or they think that, hey, I want to buy more along the way. I know I've bought in multiple times when I'm investing in a company. There's nothing wrong about that, but just don't overdo it. Don't just keep adding in, just completely, going in tunnel vision and just throwing your money into it, trading, or just dumping money, or overselling when you're panicking. Just slow down and just focus on making logical and just one big decision, or just a couple large decisions through time. This may be slightly a weird one on here, but I just hope to keep that in mind for people out there. Don't get too caught up in this crazy trading and all the numbers and everything. You can really slow down, do your research, and just take it easy. It's okay. It's not it's not a race. It's you want to go steady, and you want to be knowledgeable of what's happening. So, number 5, never invest more than you can afford to lose. This is so important. And this goes along with the first quote that we saw on here as well, with the greedy part. If you get too greedy and you dump all your money in and you lose it, the loss could be devastating. I always tell people, never invest more than you can afford to lose. And when I personally invest my own money, I act as if I had just taken that money and thrown it in the trash can. Now, that may seem a little weird for some of you, because you're like, well, my money's not thrown away. I can still see it on the screen. Maybe I've gained money. Maybe I've lost a little bit of value in that. But overall, I like to say I've just thrown it away, because that way I know that if I threw that money away right now, I'd be okay. I can still go on with my life right now if I lost my investments. I wouldn't change my way of life. Would it suck? Yes, but it wouldn't be completely devastating. I wouldn't have to, sell my house or anything like that. It wouldn't be that bad. I wouldn't have to, drop out of school or whatever it may be affecting your life. So as long as you can last without it, that you don't really need the money to survive, and that it wouldn't really change your life if it was to disappear, it's okay. I think these are some questions you should ask yourself before investing in any form, whether you're going to be day trading, whether you're going to be just investing in some, a really long-term investment, even just, basic things like this. I think it's really important. And honestly, you have to take every single one of these to heart and just make sure you apply every single one of these. I'm just going to go back through them really quickly. So make sure to be fearful when others are greedy and greedy when others are fearful. Honestly, this is a great quote, but on top of that, do your own research. I cannot emphasize this enough. You need to do your own research, guys. If it's in the news, it's too late. However, you can compare the news with your own research. So that is one thing to consider. Number 4, don't overtrade. Just slow down and make a logical investment or a very logical trade based on your own research and what you've figured out from doing your own research. Number 5, never invest more than you can afford to lose. You want to minimize your risk. That's all investing is really about, is finding value and realizing what value is in a company, and then minimizing how much you're going to lose if basically your investment goes wrong, because it always can. All right, well, I know that was kind of a rambunctious video, and I may have been talking a little fast, but destroy this like button, because that was probably the top 5 most important facts that you could ever need when investing or trading. And I'm going to have a lot more of these type of videos coming out, so please make sure to take this to heart. And here's some other videos to check out if you want to learn some more information. This is David Scheuer with Stockerfinance.co, not .com, because Stockerfinance.com got stolen by someone on the internet. So now my blog is Stockerfinance.co. Anyways, thank you guys, and I'll see you guys next time.